We have audio. We do. All right. Video. How we doing, everybody? Just doing my checks here, live on Facebook, LinkedIn, YouTube, X, Instagram. We're good to go. We can get rid of that banner. We can look at the comments. There we are. Good morning, everybody. Let me get to my notes. October 2, 2024, episode 283, Mornings with Scott, the best damn business show for medium and small businesses on the planet. On the planet. Markets are getting crushed this morning, huh? It does not look, well, on my screen anyways. Everything's red. Everything's red, except for oil. Except for oil. I was excited, though. I got my statement out of the trading account where we did our options trade. You remember our options trade? I don't know if I'm going to find it handily here but my trailing 12-month, yeah, it's shut off. But my trailing 12-month returns in that account, trading account right now, were 101%. So that's not bad. Double your money in that period of time. Yesterday, we talked about the ILA, the International Longshoremen Association. And this relates to the strike at the ports around the world. See if I can get myself centered where I want to be there. Talks about the strikes predominantly in the U.S., and I won't go over the details again from yesterday. You can see yesterday's show, but the union was demanding is demanding a 77% raise over 6 years as a precondition for sitting down for discussions. So we were laughing at that yesterday, and the amount of hysteria in the financial news, which is the lesson from yesterday, not the lesson, but the hot take, that's what I'm looking for from yesterday, is that this is way overblown. This will be settled in a couple of weeks. There's no way that they're going to let this continue on from a political point of view. And so there wasn't much additional news on the story except for the social media and X in particular. They start digging into what the hell is this union? Who is this person? And what we learned is that we have the union leader has added a bunch of color to the story. So this is a guy who you may have seen on social media clips out and screaming and yelling, or at least being very forceful that he's going to shut down the whole world, in effect, that his ports impact 50% of labor in the world, and the whole world's going to lose their job if he doesn't have his demands met. And so anyways, this fellow's name is Harold Daggett, Daggett, and he's been the president of the International Longshoremen Association for over a decade. So if you didn't see a picture of this guy, you should go look, because in the video, he is straight out of Central Casting. He's an older guy, and he's got this thick, well, he's yelling about the greed of CEOs. He's got this thick bling gold chain on and a bunch of other jewelry. It's like when Kamala went to the border wall wearing her $66,000 Tiffany's necklace. Anyways, this guy's got this thick gold chain on, like he's in a rap video, and he's threatening to shut down the entire world, and that all Americans will lose their jobs unless his demands are met. So when you first look at him, you think, oh, well, this is funny, and this is kind of a joke, this character here. Well, it turns out the guy yelling at you about corporate greed in his bling is he's actually being paid $728,000 a year from the ILA, the International the International Longshoremen's Association, plus another 173 as president of the local union. So this guy's making close to $1 million a year as a labor leader. and he drives a Bentley, so that's cool. And he has a yacht called Obsession, as he screams to CEOs about the corporate greed, which prompted Elon Musk to post, dude has more yachts than me. It was Elon Musk's post about that. So they dig in further on social media. It turns out this guy has been accused, not just by Twitter people or X people, but been accused by law enforcement as having organized crime connections. He was once charged with racketeering. I may not have my details straight, but close enough. And anyways, charged with racketeering, where one of his co-defendants was found, quote unquote, decomposing in a trunk. Uh, and then another one, I wasn't sure of the details of this, but they found this other person at the bottom of a lake, all persons associated with this labor union boss. So definitely adding some color to the story. I don't think that really means anything, but at least it's more interesting than it was yesterday. This has the makings of a movie. I don't think it's going to work out well. Well, maybe it will. We'll keep an eye on this story. There was a post by. Do you follow Jason? I don't remember his last name, but he's the host of the All In podcast and a tech guru. It does I love that podcast. By the way, one of our audience members said to me a couple of days ago something that was most heartwarming. He said that he used to listen to the All In podcast, and now he listens to Mornings with Scott because that's where he gets his take on the current news. And he does a lot of trading, this fellow, and just tries to understand business, and is a really good guy. And so he says that I'm sure he still listens to the All In podcast, but now he listens to Morning with Scott because he values the opinion and the hot takes on the news stories and what that might mean from a financial point of view. And for those of you looking to start a business or be in small business or medium-sized businesses, so that just played right up to my ego. I like that a lot. And by the way, I asked him, he says, so if I'm thinking about a story and I'm wondering sort of the context of all that, well, then I tune into Mornings with Scott. And I said, well, how often do I hit that story? And he said, seriously, 80-90% of the time. So that's interesting. I'm not quite sure how that works because I just sit here in the morning at 6 a.m. Mountain Time and try to figure out what stories I want to talk about for the day. So that reminds me, if you, as an audience member, want me to talk about anything, just let me know. Just send me a note, one of the comments. I check them all. And unless they're horrible, but I check all the comments and I'm happy to address whatever you want me to address. So Jason posted on X from the All In podcast. He said this Harold Daggett has done more damage to unions than Jimmy Hoffa and Lee Kuan Yew combined. I don't know who Lee Kuan Yew is. Lee Kuan Yew. Threatening fellow Americans with losing their jobs if his guys don't get a 77% raise, while average Americans try to keep up with inflation, is the peak of cutthroat, disastrous approach. The obvious strategy. Remember I said yesterday, the real issue here, apart from the raise, is that the docks in America, where all trade goes through, are some of the least productive docks in the modern world because they're not automated. In particular, they're tied up with the union. And I said, 20, 30 years from now, on yesterday's show, I said, there's going to be no labor on the docks at all. It's all going to be automated. And so how do we get from here to there? That's the real issue, I think, behind one of these strikes. Jason says the obvious strategy is to give him what he wants in the short term and then automate everything. You can break the monopolies these unions have over our economy, and so he could never make good on his threats. I think that's probably true. I think that we're all going to cave into the 77% plus whatever it is, and then you're just going to automate everything, and there won't be any longshoremen anymore. Kind of a shame, but I think that's where it's going to head. Did you watch the debate last night? Speaking of meaningless things, it was okay. It was okay on the entertainment scale. And remember, my view, as I told you yesterday, I think the VP debates, unless there's a complete blow up, really aren't going to have any impact at all on the election. But it was a little bit entertaining, but mostly it was interesting or amazing, in fact, on the impressive scale. Walz was fine. Struggled at first, and I think he struggled and gained his footing in particular on abortions and healthcare. But JD Vance was incredible. What a performance. What a performance. Polished, empathetic, smart, logical, unflappable, even when the CBS moderators were going at him with complete BS. He was very impressive. Waltz's worst moments, I thought, were on his lie. He said he was in China at Tiananmen Square during the massacre. And it turns out, of course, he was not in China at Tiananmen Square during the massacre at all. And CBS, to their credit, called him out on that. And he said, well, he first of all, he ignored it. He talked about something else. And then they pushed him again, to their credit. And he said, well, yeah, I wasn't there. And basically, sometimes I just say stuff. And I was there before that, but I wasn't actually there at the same time. Sometimes just stuff comes out of my mouth, and then he called himself a knucklehead, as if that's not going to be a clip on social media. So Walz called himself a knucklehead. He says, but I am a good grade 4 teacher. So that's what you want from your second in charge, your VP. Vance, I don't think he had any bad moments. I thought he was weak on abortion, on healthcare, on J6, at least from my perspective. But I don't think he had a bad moment. I think he probably spoke well to the Republican crowd. Some posts last night from X that I saved as I was listening to the debate. Adam Townsend, who so you should follow on X, is really a great persuasive commentator on business and on politics, an investor and self-described extreme salesman. Said JD Vance is amazing. Holy moly. Bill Ackman, billionaire hedge fund. JD Vance is whip smart, measured, unflappable, and fair, and respectful to Walz. What's not to like? John Lefebvre, remember the GS elevator guy? I used to love that account and had a great book out. I forget the name of that book. I'm looking around my room here to see if it's handy, but that was that was about his days at one of the investment banks and doing pitches and living in Hong Kong and all the debauchery. But he said, regardless of politics, every objective person should agree JD Vance is infinitely more intelligent, competent, and articulate than Tim Walz, with significantly better command of the issues. Bill Ackman, again, I found myself feeling sorry for Governor Tim Walz. So did I, by the way. I agree with this. He seems like a nice guy, but in way over his head to be second in line to run the country. A bit of a buffoon, but in a good way. A kind man that will get his face ripped off in a negotiation. Not someone that I want making consequential decisions for all Americans. Yeah. Okay. Well, that's enough of that. So the debate is over. There will be no more debates. I don't think it's going to have any influence over the election whatsoever. But I think that JD Vance may be a president 4 years or 8 years from now. He was pretty impressive, and he's only 40 years old. So that was good. What were you doing at 40? Wall Street Journal reports high new vehicle price. Look at in the automotive sector, it's fine. It's hard to narrow down the bad news stories and just to pick one or two that you might want to go with. High new vehicle prices and borrowing costs are keeping some shoppers on the sidelines, pointing to what is expected to be another lackluster sales year for automakers. Third quarter results are in. Vehicle unit sales fell 1.9% compared with a year earlier. Most major automakers reported their results July to September on Tuesday, and Tesla actually announced this morning. GM was down 2% for the quarter. Toyota Motors was down 5.6%. They're getting crushed. As I said, the Wall Street Journal report that I read this morning, Tesla's going to announce this morning, but then I was logging on. They did, in fact, announce, and they were pretty close to expectations. I've seen some reports they were just slightly below, and some reports they were slightly above. I don't know who's getting this wrong. I didn't have time as I was going live here to do a deep dive on it, but it doesn't matter. They were close to expectations, but the market was expecting more than expectations, if that makes sense. Can you expect more than expectations? Because when I was logging on here, Tesla was down 6% in early trading today. Oh, we had a flash. We had a flash on the stream. Are we still going strong? I think we are. We're still on Instagram. We will carry on and hope that the system is still working. Meanwhile, auto execs are bracing for any impact from a dock worker strike that took effect Tuesday. That's not going to be in effect. Sluggish third quarter results put automakers on pace to sell around 15.7 million units this year, which is 2%, as I said, less than last year, which was already down from highs because they had supply chain problems last year. I might have been one of those supply chain problems, but we've got that secured. We're doing well now. Car makers posted 5 consecutive years of at least 17 million vehicles per year. And well, let's carry on from here. The stagnant U.S. market is facing several challenges from traditional automakers, including fierce competition in China. If you're a luxury automotive, I won't mention any brands because I sell to a lot of them. But if you run a luxury automotive vehicle, just think of the top of the top. A big part of your market these days is China, and as China goes, your sales go. And China is really struggling right now, and so that automotive market has crashed, and therefore luxury makers are struggling with that on unit sales. For sure. So, bottom line, automotive market is having a cyclical downturn, and I would like to see a research study about in North America, US and Canada, if the US, first of all, number one, the automotive sector, is that a leading indicator of serious trouble? Is it just in the middle of serious trouble, or is it a trailing indicator of serious trouble? I'm thinking it's near the front of that curve. I think that a collapse in this industry is early on in the recession talk that we've been having on Mornings with Scott, and so I don't think it's good. And secondly, I'd like to know how much of the economy is tied to the auto industry, not just directly pumping out cars or pumping out parts in a tier two supplier or whatever, tier one, tier two supplier, but of parts. But it just spreads out way beyond that. There's entire communities that are tied to the automotive sector. Where I come from, I've worked a lot in Windsor and some surrounding communities in the 90s when the heavy metal stamping business was wiped out and taken to Asia as part of globalization. Whole communities just lost their whole reason for being, their industrial base. And you saw that in the US and the Midwest as well. Ohio, Indiana. I'm sure I'm missing a bunch of states, but it's been a serious problem. Anyways, you're having a cyclical downturn, which is normal. I mean, that's just tied to the economy and inflation and all these sorts of horrible things that are going on under the Harris-Biden administration. But you also have disruption in the auto industry, technological disruption. And you wonder, are we at a tipping point? Naval, I've talked to you about Naval at NAVAL on X before. A great follow, widely thought of as one of the smartest guys around from Silicon Valley, a VC investor, angel investor, and just smart wisdom sort of guy. So he puts on X. I had a couple of posts in the last, say, month. One of them was cars are about to go through their iPhone moment. Cars are about to go through their iPhone moment as it all converges down to two companies, Tesla and Google. Interesting concept. Tesla and Google. He also posts on X, cars are turning from an asset into a utility. And the idea here, I think, is that we are no longer, they believe, Silicon Valley believes, we are no longer going to be buying a car for freedom, and we love our muscle car and it looks cool and it gives us prestige and status. We're going to get that an automobile is going to be a utility. It's going to be like a fancy iPhone. It's going to be a computer, and we will get prestige by having the coolest mobile computer, but it's going to do a bunch of other things beyond just commuting us or taking us from point A to point B. So he says it's going to go through the iPhone moment, which means that the GM could be BlackBerry. Remember the BlackBerry with the buttons, and I didn't want to let go of my BlackBerry, and this touch screen stuff is bullshit. Yeah, not according to Silicon Valley. They're just going to wipe out the car industries. Elon Musk tweets, posts on X, almost all vehicles will be purely electric long term. Combustion cars will be a niche like horses. I'm not sure I'm buying it, but I also telling you, I wasn't buying the iPhone. My BlackBerry, I hung on to that thing like you wouldn't believe. So I could be wrong on this. Silicon Valley is coming after the auto industry big time. Who do you think will win? By the way, coincidentally, or not coincidentally, we are currently selling at Sinclair Range, an auto parts manufacturing firm. And you can check that out today. We'll release that on our website. The teaser letters went out, introduction letters went out last night to the database. And that is my next meeting after we are done the live stream here. Okay, I've been threatening for a couple of days now a couple of shows now to talk about personal goodwill, business valuation as it relates to your private, smallish business when you want to go sell this thing and get some wealth and retire. Personal goodwill, what the hell is it? How does it impact the value of your business? And then this comes out of always be broke. Getting you to buy an iPhone was a challenge. Getting you to buy an iPhone case was a whole. Yes, it was. It was a huge battle for me to get an iPhone case. I don't know who you are. Always be broke. You must. I'm gonna have to look at your handle. Obviously, you know me because you were absolutely dead on. Personal, and my iPhone case is blowing up right now. It's all ripping apart. I need a new one. Personal goodwill. What is it? How does it impact your business? Look, this came out of coaching sessions. Now, if you go and buy the course that I'm selling and providing super cheap for small businesses, medium businesses, solo entrepreneurs, if you want to learn about things, the first module was about why we resist change and how to manage your business with KPIs, having a board of advisors, the role of confirmation bias and information blindness, why we don't change, and ways to hack that problem. Continuous improvement is what I was looking to try to say earlier. Implementing continuous improvement in any size or stage of business. And the second module, which will be released in 13 days, October 15th, is on cash flow, how to build a model, how to manage, how to budget, how to monitor, how to improve, how to report your cash flow. Well, with that course, you get some free coaching sessions, and people have been taking me up on that offer. And one of the things that's come up repeatedly is this idea of someone having a small business in their local community and worried about the personal goodwill or the transferability of the value of that business. Excuse me, sorry about that. And so personal goodwill is what we say in the business valuation realm. And the definition of that is it refers to a portions of the business value that is directly attributable to individual characteristics of the owner manager, right? So that would be skills, relationships, reputation of a specific person rather than the business entity itself. Best explained by example. Let's say you run a contracting company in your local community doing whatever services, and you have your revenue, you pay yourself, you pay your rents and your debt service for your trucks and your tools and your materials, and after all that sort of stuff, you're netting out, say, $500,000 a year in free cash. Okay, so you got a local contracting community business in your community. You're netting out free cash of 500 grand. You're thinking to yourself, I'm getting a little older. I would like to retire, pay off the mortgage, and so I'm going to sell my business to somebody else who wants to run my business in my local community, and I want a 4 times multiple on EBITDA, on cash, whatever metric you want to use. So 500 times 4 is a $2 million valuation. I want $2 million for my business. A 4 times multiple is pretty reasonable. Now I come along and I'm thinking, I would like to buy your business. I would like to be in contracting in your local community. And then I quickly realized, with some due diligence and talking to some customers, I realized that if I were to own your business, I would not make $500,000. I would make a lesser number, maybe let's say $300,000. I would do that. I'd have the same assets. I'd have the same business. I'd have the same handful of employees. But at the end of the day, the customers were buying from you because it was your personal brand. It wasn't the company's personal brand. And so I figure, geez, I'm not going to make $500,000. Maybe I'll make $300,000. Well, if you want $2 million and I can only make $300,000 a year, that's a 6.67 times. Yes, 6.67 times multiple for me. Okay, I don't care what you were making. I care what what I can make off this, because value is perspective in nature. Value always looks to the future. The history could be a guide, but it doesn't matter. What matters is how much money I could put in my pocket after tax, discounted for time, discounted for risk. If I can only put 300 grand in my pocket, I don't care that you used to make $500,000. Now, why is it that I can only put 300 in my pocket and you can put 500 in your pocket? Because of personal goodwill, because the brand is tied to you, because the business itself does not have an infrastructure to operate on its own without you for a period of time. It's tied very much to you. So this is a real problem in business valuation and in actual M&A in small businesses and people trying to sell their business. And I know that as a business valuator, but I also know that through my M&A career, and more recently through coaching sessions where people are bringing up this issue and they're coming up with different strategies to try to mitigate this personal goodwill, because it makes your business much more valuable in when you go to sell it. In my example, I can't afford to pay you the 6.67 times because I'm only making 300 grand. So what are you going to do about that if I'm your only buyer? Well, what you're going to do about that is you're going to lower your price, or you're going to work on some sort of earn out or financing arrangement, because I can't afford to pay you and you need to work with me going forward. You're going to end up with a job with me because you have to help me make that extra money and build up my personal brand to replace your personal brand over the next 3 years, let's say. And that's what's going to happen. So that sucks. That sucks. That's what personal good sucks for you. That's what personal goodwill is. It's not transferable. Now, do you have it in your business? I have previously on the Winning Momentum podcast proposed a test for this. If you can't go on holidays right now in your small business, if you can't go on holidays right now, and for say 6 months, 4 to 6 months, without your business just falling apart, you have too much personal goodwill. It's a real problem, and you need to find a way to mitigate that. My business, I was, if you know me, you know that I was sick a lot of 22, 23, and I wasn't around in my business very much for probably 9 months, or at least, I was struggling and I wasn't really focusing and paying attention. And a lot of the business just cratered, and it was a real problem. I have too much reliance on me in my business. I need to fix that as well. That's what personal goodwill is, and it impacts the value of your small business. Those are my prepared remarks. Anything I need to answer in the comments? I think I've captured all of those. Pretty sure. So Monday to Friday, 8:30 Mountains. Mornings with Scott, live on Facebook, LinkedIn, YouTube, X, Instagram. I'm pretty sure we're doing a show tomorrow, but I have a late board meeting tonight, and then I need to drive 4 hours to get to Calgary for some early morning meetings. I think it'll work out. I'll probably be doing this from the show from remotely from Calgary tomorrow, but let's just assume this is going to work out. But if it doesn't work out and you don't see a show, well, you know what happened. Thanks for listening, everybody. Appreciate you. Talk to you tomorrow.